Hey traders, John Howell here. In this video we're going to be having a bit of an update on the markets across the board, all the indices, looking at the Dow Jones, the S&P, the Nasdaq, also be looking at the Russells and stuff like that as well too, and just a broad overview of what I'm seeing right now in the markets, and a few stocks as well that I want to mention in today's video. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, if you haven't done so, make sure you go get that sale that I'm running right now just for $7. I'm my whole brand new breakthrough trading course, foundations, chart reading strategies, trading systems, mindset, you name it. If you need help, if you're struggling, go get that $7 trading course. I promise you, you're going to absolutely love it. Now, let's actually get straight into what I'm seeing right now across the board. And one of the hardest things that I'm noticing right now, when it comes to not just the markets, right, is that there's a lot of confusion about what's going on right now and how we're trading right now and what's going to happen moving forward, right? And that's always the hardest thing that's always the hardest thing about trading, right? Is like we never know, like no one knows exactly how things are definitely going to plan out. And that's where it's so important and so critical that we adapt the mentality of, okay, I have no idea how this is going to play out. Are we going to see a 40,000 Dow? I'm looking at the Dow Jones Industrial Average right now, right? We're looking out, right now, are we about to break 30? Are we about to continue breaking 30,000 and see a 40,000 Dow? I do believe eventually, yes, we will. But it's always hard to say, right? Like we never know exactly. So the whole thing about this whole trading thing, guys, is that one thing I really want to stress a point here is that instead of us trying to predict what's definitely going to happen with the markets, it's so important for us to step back and say, okay, you know what? I am going to get involved with these markets, but I'm going to get involved with these markets based on a probability basis and based on some sort of a setup that I believe in, something that's going to give me the edge. And that's where your biggest success is going to come from within your trading. I find a lot of people out there are trying to hope that they get it right and so on and so forth. And that's never the way to go, right? The way to go into trading for your long-term success anyway, moving into 2021, guys, your long-term success in your trading is going to come down to your ability to, one, be able to handle uncertainty, and two, to be able to be patient and wait for setups that you believe in. Now, in that $7 trading course, one of the very first things I talk about, there's a video there that goes about half an hour long, talks about the bullseye strategy and about how I have a whole framework there. And, and I'm not going to go into detail about it here, but it's a whole framework about how you should be, what's the mentality that goes into a trader or a successful trader, and how should you approach these markets? Should you approach it from a perspective of watching YouTube videos and placing trades? No. But you should be basing it based on some sort of a system, right? And that's where if you're brand new to the markets, and you're trying to figure this game out, right? Trying to figure this thing out, trying to figure trading out, how do I get ahead? What do I do? The number one thing you should be spending your time on is trying to find a system that's going to give you a good win-loss ratio, and then getting really good at that system. Now, a good win-loss ratio could be 70%, right? Like you don't need to make money in every single trade for you to do well in trading overall. So I wanted to start off with that this week, guys, because we're leading up into Christmas. We're leading up towards the end of the year. And I find that, guys, amongst all this other stuff, all this other noise that comes along with the markets, and unfortunately, when we get involved in the markets, right, we want to learn all this stuff. And unfortunately, when you learn all this stuff, it sways your ability to be able to critical think and be able to say, you know what, even though my system says get into this trade right now, I'm not going to because I'm a bit nervous and so on and so forth. And then guess what happens? Those trades run on for profits, don't they? So that's the number one thing that it comes back down to these markets here, is that if you can look at your trading as a whole 12-month view, if you can look ahead over 12 months and look at your trading over the next 12 months or entire 2021, and just say your system, that whatever system you're trading is going to give you, call it 50 trades, right? Then you're going to have a win-loss ratio in those trades, and as long as you can have good risk management on every single one of those trades, at the end of the day, you're likely to do well. That's how trading is done. It's the in-between, it's the impatience, it's loading up too much, and emotionally trading and all that sort of stuff that actually gets you. So moving on through to the Dow Jones right now, is that we are really in a bit of a no man's land right now. We're just a bit of a stuck. It's just really floating by. Once again, if I bring up my good old trend lines, let me actually bring up just something basic with no moving averages, because moving averages sometimes don't really give us the good indication of what we're looking at here. We can see that the Dow Jones right now is really stuck here, and it's like we're getting to the pointy end of this funnel, and we're going to break out of this level here. Now, I don't know exactly how it's going to plan out. Moving into next year, I believe we're going to see a massive economic boom once this whole COVID thing sets into place and so on and so forth. But by looking at the Dow Jones, we're in this level here, and I want to say this: when we think something cannot happen, that's probably always going to happen. So we always need to be keep an eye on both scenarios, right? What happens if we drop down from here? Okay, scenario number one is we drop down. Okay, if that's the case, then we're probably going to head back down to around 28,000. All right, cool. Scenario number two: what happens if we start to break out above 30,500? Well, then we're probably likely to run back up towards the 33,000, maybe in a bit higher from there. And I'd say that'll be maybe that through there, or maybe if I can bring this up through to here somewhere, like absolute high point. We may even go for a nice run up to the 34,000, maybe even up to the 35,000, which is a nice round number. So we may go through that, right? So that's the two different scenarios we can keep out for, looking at the Dow Jones. Moving over through to the S&P 500. And again, the same situation. What can we look out for here? Firstly, I wouldn't be trading against the trend. We're in a big bull market right now, and there's no sign of this actually topping out. And I wouldn't want to be fighting the market right now. So scenario number one is we drop to the downside out of this sort of channel. And if scenario number one happens, then we're probably going to get back down towards the 3,500 level, probably 3,400, somewhere around about this level through here is probably where we're likely to drop down. If indeed we drop to indeed we can just break up and we continue breaking out of here, then we're probably likely to go run to around about the 4,000 plus mark on the S&P 500. And if it's the ultimate high point up here, that ultimate high point, then it probably even going to be a bit higher than that. Maybe I have a 4,000 target at least, but you can see where the channel target is coming into play through there. So that's S&P 500. Moving over through to the Nasdaq. Nasdaq is very weird. Scenario number one is indeed. Let's actually do this here. So we can see that on the Nasdaq right now, if I just draw this from there to there, I can see we have a bit of a trend line here. So if we have a bit of a trend line coming all through here, then we can see if we break this trend line, then we'll probably come back down towards this trend line here. But it's very difficult to see with the Nasdaq. I don't think the Nasdaq, if we do see scenario number one, which is drop to the downside, I don't think we're likely to see the market actually drop a lot. But I actually see a lot more upside coming with the Nasdaq, which is really interesting. We're definitely starting to see a lot of momentum breaking out of this sideways pattern. So I'm a very big believer in if we do get a drop to the downside, then we're probably likely to continue back to the upside, which is the Nasdaq. Moving over through to the Russell 2000. Now the Russell 2000 is one that I believe we're likely to start to see some form of pullback, because we've been in a very long extended sort of what we call a price phase, which the market has gone up for quite some time here. Very long extended price phase. So when looking at the Russell 2000, we can see that to me, I believe we're likely to start to see at least a bit of a pullback through here. A pullback, and that's all I believe. A pullback and then a rally again. And Moving over to the Russell 3000, and Russell 3000 sort of the same thing. I see a bit of a pullback coming out of the Russell 3000 as well too. So maybe all the indices are going to start to see a bit of a pullback as well too. So that's what I believe, guys. I believe, at least on a bit of a short-term basis, guys, we're likely to see a bit of a pullback out of all these indices. But that'll actually probably be a really good buying opportunity, because we're probably likely to see a much more accelerant movement to the upside, I believe, moving into next year. So I hope this helps you out today, guys. Just above all, guys, you know, we look at these charts, and we look at technical analysis to give us some sort of, you know, advantage of what may happen. And that's all we're looking for, right? Because we can throw a dart at something and then try to get into something. Oh, well, I think JP Morgan today looks good, you know, or I think, you know, Goldman Sachs looks good, or I think Apple looks good today. You know, it's like you throw a dart. But all we're doing on a technical basis is technicals never give us certainties. There's no certainties in investing. And if you're looking for that, then go sit in the corner, suck on your dummy, and then don't do anything, right? Because life is full of uncertainties. But when we start to look at technical analysis, it gives us a much more of a higher probability that that's going to happen. And if we can take that same probability, high probability, guys, or probability in any trading system simply means this. Any trade you take, if you have a trading system, whatever rules you follow, you take a trading system and you take one trade today. That's going to be a random outcome. You know, who knows? Could be a losing trade, could be a profitable trade. See, that it's a random outcome, right? Every single trade you take has a random outcome, but it's built in with a probability of an outcome. Now, when every trade you take, if you're taking it based on a trading system, and not, if you take 5 trades and all of them are 5 different things, then that's not a trading system. That's just you trading because you want to trade. But if you take a trading system and then every single trade you take is, it could be anything, right? It could be a flag formation, it could be a support trade, whatever. There's a whole bunch of range of trading systems out there, and no one's perfect. And stop looking for the holy grail, because it doesn't exist. So if you have a look at that, right? If you have a look at the way that, so if you have a trading system that you believe in, call it a 70% success rate, then every single trade you take has a random outcome, right? Yeah, and you've got to accept that. There is no absolute certainties of that outcome actually forming out on that one particular trade, but it's built in with a probability and outcome. And the only way to see the real probability of that trading system is to take 20 trades in a row, regardless of what you think, hope, or fear. 20 trades in a row, every single trade. Some are going to be losses, most are going to be profits. You never know up front which one's going to be it. And then from that process, that's how you start to get ahead in the markets. Now, the hard thing for us, right, is that 1, we don't even stick to any system. 2, when we do stick to a system, then we start to pick and choose what we think is going to be a profitable trade. And the ones we don't think is going to be profitable end up being profitable, and so on and so forth. So that's the big game there, or that's the long-term view there that one must take if they want to start to get ahead in the market. So I hope this helped you out today, guys. Once again, if you'd like to learn more about this sort of stuff, then grab that $7 trading course with the link below, and make sure that you at the end of the day, guys, make sure you're just taking care of yourself, okay? Don't be loading up. Don't be going all in. That's just stupid. There is no all in on any one thing. Please don't be doing that, okay? It's just silly, because exactly what I've said in this video. Doesn't matter what you see on the YouTube, doesn't matter what I say, doesn't matter what anyone says, there's no guarantees of making money on any given one trade. You know, not even the world successful investors make money on every single trade. And you know that. You see hedge fund managers and Ray Dalio and Paul Tudor Jones and, you know, Michael Burry, these really successful sort of fund managers, you know, you see that some trades are going to do okay. Some trades are going to be losers, and then probably going to have a 20% of the portfolio do really, really well. You just never know up front.